Good afternoon, traders, and welcome to the next installment in the Admiral Markets Trading Spotlight webinar series. You're very welcome here to join us. We appreciate that here at Admiral Markets we recognise that it's been a rather tumultuous few months with what's been going on. We hope you're all safe. We hope you're all well here from everybody at Admiral Markets, and we really appreciate you coming to join us for our Trading Spotlight webinars. And today what we're going to talk about is trading the markets using Bill Williams' chaos theory trading style. Now, as always, I appreciate we have a real broad spectrum of experience in the room for our session. So there are some people who are complete beginners to people who are, very experienced traders. So, it would help me to, help you as much as I possibly can. But if you can just let me know, what your kind of trading experience is, how long you've been trading for, and in particular, what, if any, experience you've had trading chaos theory and also using a Bill Williams trading style. Maybe some of you are, have quite adept at it. Others may never have even heard of it. So, we're trying to cover all the bases here so you can all get some benefit and value from our session today. So we have Tyrone says that his actually background's crypto, but he's still trying to figure out a decent strategy. Well, this might give you an opportunity here that we can help you with. So what will we talk about? What's on our agenda today? Well, I'm going to talk a little bit about chaos theory and a little bit about, how it manifests itself in the trading spectrum. And we'll talk a little bit about how we can analyze markets using chaos theory. And we'll really, mostly focus on how we trade markets using Bill Williams' chaos theory trading style. And then to finish off, okay, we'll have a look at chaos theory in the live market. So stay with us till the end so that we're able to show you, how you can see it actually applied on the Admiral Markets MetaTrader 4 platform. So, lots of comments here from everyone. It's great. We really appreciate the interaction. It's fantastic there. Okay. So Philip says, hi, Paul, got no experience of Bill Williams. Well, you will by the end of this, Phillips. And Anthony says, been trading demo from last year, live since lockdown, not heard of Bill Williams. Well, there you go. It's this will be a good session for you. Peter says, I've never come across the chaos theory. So, yeah, Peter, by the end of this, you will have had a little bit of an introduction. And Tyrone's just he's smiling away there. Okay, and Tyrone says, awesome, thank you, glad to be here. It's great for you to be here, Tyrone. Okay, we really appreciate the interaction. We appreciate that everybody's got a lot going on in their lives at the moment, and so it's fantastic to be here to be help with your education on your trading journey. So, for those of you who don't know me, my name's Paul Wallace. I've been a trader for many years and coached traders down the years. I primarily sort of trade FX indices and commodities myself, and I like to be a kind of trend trader for my kind of swing and position trades, and a mean reversion and reversal trader for my intraday trading. And today we're here, because of our Admiral Markets, and as you can see there, Admiral Markets offer a broad spectrum of instruments that you can trade with very competitive spreads. They are licensed and regulated across a range of regulatory environments around the globe, and you can engage with markets on MT4, MT5, and their own Supreme Edition. And if you have any more questions about that, well, then please get in touch with the account representative, and they'll be happy to guide you. So, what we're actually also looking at is, as I said, is chaos theory and trading. So it's about, do you know that you can apply principles of chaos theory to your trading strategy? Do you even know what chaos theory and how it applies to financial markets? Well, you will by the end of this webinar, and we've already seen from some of the comments there that people might, be new to trading but have never heard of chaos theory or never even heard of, Bill Williams' way of utilizing it in his own trading. And in this session, we'll discuss chaos theory in financial markets and how to use some of the free tools in MetaTrader 4 to help you not only understand trading chaos theory, but actually how you can apply it, how you can actually utilize it in your own trading journey. And for some of you, as I said, if you're new to trading or if you're new to actually even understanding chaos theory, or you're just still looking for, a simple trading system to help you, well, this might actually provide you with that. So stick with us till the end and you'll be able to get an idea of some elements of this trading style and also how it shows up in live markets going on today. So we're we're going to talk, as I said, about chaos theory and in effect, its impact in financial markets. So, in the time we have here today, I can't really do that justice, the entirety of chaos theory and its impact upon financial markets. But what we are going to look at is one sort of small element of it, and in particular, how that applies itself to trading, because we want you to be able to take, some great ideas and concepts and theories and tools and tactics from these webinar sessions and be able to utilize them in your own trading from tomorrow. So, if you're really fascinated by, chaos theory and, and how it impacts financial markets, you'll find that there is a breadth, all right? There is a breadth of material out there on the internet. Today, we're just going to focus on kind of one small narrow element of it that will help us, just sort of identify how we identify trades and engage with markets. But, you'll probably already realize yourself, okay, that, markets are chaotic systems with complex dynamics. Yet, to a certain extent, but we can make valid market forecasts. So they are neither completely efficient nor completely chaotic. And that is that's a kind of very abstract concept, that sometimes, takes a little bit of time and experience as a trader to completely understand. But what we're using chaos theory for is that it gives us an element of an answer in that, markets are complex and chaotic systems and their behavior contains a systemic and random component. So, we have elements where, as it says, markets are not really completely efficient. They are actually quite systemic, but then also they can be an element of chaotic. They can have an element of random, and there's a kind of a fine line between it. So we can make forecasts, but they are precise only to a certain extent. And chaotic systems are predictable for a while and then appear to become random, which, might help you explain and understand. It might actually leave you even more bemused and bewildered. Have no fear, stay with us. And what we'll see is, slide by slide, I'm going to build upon this into how it turns into a trading system that you can use in financial markets. So as I said, you can read lots around chaos theory. Edward Lorenz there, okay. He was talking, as you can see there, he coined the term the butterfly effect, which applies to intricate dynamic systems such as weather, ecosystems, and financial markets. And it's one of those elements that once you start to read about it, you'll find it absolutely fascinating, and you will see how it applies to everyday life, not just financial markets. But today, we're focusing on trading, ladies and gentlemen. So with that in mind, how do we go about actually applying chaos theory in our own trading? Well, for this, we have a trader called Bill Williams to thank, okay? And in particular, he wrote 2 books about trading chaos and about another book called New Trading Dimensions, which are all about combining trading psychology with chaos theory and their effect upon markets. And I suppose it's a question for yourselves, those of you joining us here today, has anyone in the room ever heard of those books, or have you actually ever read those books at all? Are you aware of them? If you aren't, well, I can assure you that they're pretty good reads, especially for new traders. Okay, it provides an opportunity to sort of, as I said, just look at markets through a different prism. So it's and that in itself can provide a fascinating level of education, sort of educational insights. So Tyrone says, I haven't yet. Thanks. I will look into them. Yeah, you'll be able to find them, all over the internet. Okay. And they are well worth the right. And Carol says, is it available on MT5? Yes, it is. But today we're going to focus mostly on MT4. So when it came to trading and chaos theory in particular, Bill Williams believed that trading is a psychological game, and having traded for many years, I would be inclined to agree with him. Okay, and it's what it is that trading is about the way of self-realization and self-knowledge. And those of you who've joined me for many of my webinars with Admiral Markets over the years will realize, I've always talked about that, in terms of those 4 M's of markets, and one of them is managing myself, and that's about self-realization, self-knowledge. The best way to succeed is to find your trading self, get to know it better, and to follow it no matter what. And that is absolutely spot on, fantastic advice that we can provide you. And that comes from knowing your trading self. That comes from self-knowledge. allied with understanding of market structure. And that's what we're going to look at for the rest of our session. The more you understand and know yourself, know your strengths, your weaknesses, okay, the better you will be able to operate in financial markets. And sometimes when traders are very new to trading, they don't realize, they just think, oh, I just need a trading method. That's all I need. And that's how I can succeed. But as you gain some experience, okay, and as you gain a few years of trading under your belt, you realize that it is that mixture of markets, method, money management, and myself, okay? And the better you understand yourself, and the better you are truthful with yourself, the better you are able to employ, trading methods that suit your trading self. And knowing your trading self becomes crucially important. So, it was Bill's view that being profitable in trading was about understanding market structure. And in order to do this, you should be aware of the market's inherent parts, which he called dimensions. Okay, that's what he called dimensions. And there are 5 dimensions that he talks about: fractals, momentum, acceleration, zones, and balance lines. All right. Today, we're just going to focus on fractals and balance line and how they work together. If you read the books, okay, or if you find there'll be threads on it all over the internet, well, then you can add the elements with regarding momentum, accelerations, and zones. But today, I want you to be able to, as I say, take away a few concepts and use it tomorrow in your own trading. And if you can understand fractals and balance lines, that's the starting point, okay? That is the starting point of understanding Bill Williams' trading style and how it uses chaos theory to be able to sort of help you with your own trading decisions. So that first element, as he said, it is fractals. Now, those of you who have seen my charts in the past, I always have fractals on my charts, but I also realize that there'll be some people here sat thinking, what's a fractal, Paul? How does that help me with my trading? Well, bear with me, because that's what we're going to talk about now. So let's just get up the drawing tool here to help us as we go through this. So a fractal is it's a natural phenomenon that exhibits a repeating pattern that displays at every scale, and that is equally prevalent within financial markets. So when it comes to fractals, what we have here is let's just say here, this is like a picture of a fern leaf, okay, and we can see there's like a little bit of a kind of a triangle there, okay, in terms of the smaller fern, which in itself is part of a bigger fern, which in itself is part of a bigger fern, okay? So it's a repeatable pattern, okay, that displays at every scale, okay, from the micro to the macro, okay, and that is equivalent in trading. And how is that equivalent in trading? Well, I'm about to show you, ladies and gentlemen. So in trading, okay, and by our definition, certainly by Bill Williams' definition, in trading, a fractal is a 5-candle pattern. An up fractal, all right, is where the high of the candle is higher than the 2 candles before and the 2 candles after. So here we go. This candle here, there's the high. The high of that candle is higher than the 2 candles before and the 2 candles after it. Now just remember, that candle isn't confirmed as an up fractal until the second candle after it has completed and closed. And as I said, we can see an up fractal, it's higher than the 2 before and the 2 after it. So you think of it almost like a V, okay? With me so far? That is an up fractal. Not surprisingly, a down fractal is where the low of the candle is lower than the 2 candles before and the 2 candles after. So in this particular example here, the low of this candle is lower than the low of the 2 candles before it and the low of the 2 candles after it. But remember, it doesn't get confirmed as a down fractal until this second candle here completes, okay? And you might be able to see this little sort of angle, this little triangle, okay, that is drawn on the MetaTrader 4 platform and on MT5. And that is what is on the MT4 platform to help you. And I'll show you where that is for those of you who don't really fully understand. So now at the moment, we just need to understand an up fractal and a down fractal. Remember that kind of down fractal is it's like a V shape, because you've got the low is lower than the 2 before and it's lower than the 2 after it. And that's what we're looking for. So that's fractals. And now let's have a talk about the balance line. And as I say, call it enter the alligator. And I think that's an alligator shot. I think I understand it is. Bill Williams describes the alligator as being like a compass that keeps your trading in the right direction, which is all well and good, but traders are sat there thinking, well, you know, what does that mean, Paul? You know, what's Bill talking about? How do we, where's an alligator on the charts? Well, as I said, have no fear, ladies and gentlemen. All right, we're gonna show you here. Don't worry, all will be revealed as we go. So as we see, we were looking for the alligator. So here is how the alligator displays itself on MT4, okay, and MT5. The alligator, let's get up the drawing tools. The alligator is a combination of 3 balance lines, all right? 3 balance. Remember, we're looking at fractal and balance today. The alligator's jaw is the blue line, okay? The blue line here, which is a 13-period moving average at the mid price, offset 8 bars into the future. The alligator's teeth, all right, the red line, okay? That is an 8-period moving average, which is offset 5 bars into the future. And the alligator's lips, okay? The lips are basically a 5-period moving average, okay, offset 2 bars into the future. So you have the lips, the teeth, and the jaw, okay? The green are the lips, the red is the teeth, and the blue is the jaw, okay? And as you might be able to sort of already start to see that, you know, when the sort of alligator's jaw is open and wide, that is when we are of interest, and I'll explain why. So hopefully you'll be able to, we've got fractals on our charts here. Hopefully you can see those up and down fractals that are being printed, okay? And we also have the alligator, okay? We have the lips, the teeth, and the jaw. So what we want to know, and the way we think about it, and the way Bill Williams describes it, is that when all 3 lines are intertwined, the alligator's mouth is asleep and the market is range bound. So when the alligator sleeps, stay flat. But you need to be aware of the longer it sleeps, the hungrier it gets. And here's a little chart here, and you can see, you know, all of this, the lips, the teeth, and the jaw, they're all intertwined there, aren't they? They're all intertwined, okay? When that's intertwined, you can see for yourself the market's consolidating, it's range bound. The alligator is sleeping, okay? When the alligator is sleeping, stay flat, okay? Stay flat. You don't need to be in the market. You don't need to be putting trades on, okay? But you just need to remember, the longer it sleeps, the hungrier it becomes. And that's the key element for us. That's what we're going to talk about, okay, and understand. But hopefully you start to understand, you know, where you see the alligator's jaw, okay? When the alligator's mouth is shut, there's nothing going on. When the alligator's mouth is open, it wants to start feeding, and that, as traders, that's where we can start to look at getting on board. So once the alligator wakes up, its mouth opens. Remember, that's the balance lines diverging, and it starts hunting. We only trade when the alligator is hungry and its mouth is wide open. And very simply, you know, and this is one of the things that helps, you know, new traders, is if price is above the alligator's mouth, then it's an uptrend. If price is below the alligator's mouth, then it's a downtrend. It keeps it nice and simple. And hopefully you can see here in this example is that, you know, we've been, you know, the alligator's been asleep here, okay? The sort of the price has been intertwined with the alligator's jaw, okay, and lips and teeth, and then we can see that actually as that price moves, we can see as price moves, okay, as the price breaks through the last fractal, okay, and then starts to move up, the balance lines start to diverge, okay. The alligator's mouth is open, and this is where we're looking to do our business as traders, okay? So it becomes quite simple in the sense that when you can see that, you know, price and the alligator's jaw is flat and closed, you just stay away. Just stay away. You're not interested. It's only when the alligator's jaw opens, those balance lines start to diverge and fan out, that you become interested in what's going on. So, of course, what's important to us is, well, that's all great, Paul, but where can I find that MT4? How do I draw that? Well, what you're able to do is that we can see, here we go, is that actually it's already on the MetaTrader platform. Insert indicators, Bill Williams, okay, and you'll be able to see, okay, the fractals and the alligator there, okay. Hopefully you can see, and when we switch across to the charts, I'll show you as well. I'll remind you, okay, to be able to see that. So the indicators are already built into MT4 and MT5, which is, it's a great bonus for you to be able to utilize that as, as I said, if you're a new trader looking to find a way to engage with markets. And it's, as I said, it is already set up, okay? It is already set up in MT4, and, you can find and add it to your charts. And as I said, I'll show you that. We'll switch across to the screens at the end of the session, and I'll show you, but you can see that it's all there, okay? It's already in there, already set up. And so, literally you just need to click and collect, and it's effectively you'll have that on your charts. And as I said, we're just going to focus on fractals and balance lines today. There are more to the kind of Bill Williams style, but this is about having a simple way that you could take away from today and tomorrow start to work and trade with it, and give you some idea about how to engage with markets. So, excuse me. So how do we actually trade chaos theory? How do we actually use this? Well, using the Bill Williams chaos theory concepts, we look for the alligator to awaken. Okay, so here we go. Let's just draw it. When price breaks the previous fractal, we trade in the direction of the break. Our stop loss goes at the alligator's teeth, which is the red line, okay? The teeth also becomes the trailing stop loss. And once the alligator is fed, it will go back to sleep, okay? That's what we're looking at. So in this particular example here, I think this is actually quite a 1 minute chart, the pound against dollar, and it works across all time frames. Is that we can see that price is going sideways, but there is a fractal here, okay? And once price breaks that fractal, the fractal from here, let's just clear this and make it a little bit clearer for you, I hope. Here we go. Once we're basically looking to, once it breaks that fractal, well, then invariably we are trading, okay, in the direction. The price is beneath the alligator's mouth, okay, and we'll be looking to trade short, okay. We're looking to be short. Remember what it says, our stop loss would go at the teeth, okay, and then effectively what we do is we trail, okay. We trail our stop loss along the teeth until it gets taken out, okay. And as it says there, as you can see, once the alligator is fed, well, then it will go back to sleep, and we can see prices there has become intertwined, okay, and along with the alligator's lips, teeth, and jaw. So that is just literally very clearly, okay, price breaks the fractal, you trade in the direction of the break, which is stop loss goes at the teeth, the red line, and the teeth also becomes the trailing stop loss. And once the alligator is fed, it tends to go back to sleep. And that's, that's just an idea of how markets work. They have a surge and they have a rest. They surge and then they rest. If you can think of it in those particular ways, well, that will help you with your own sort of trading decisions. So, here's another example here. This is the pound against the dollar on the hourly chart. And what you can see here is kind of, sort of most of this session of the day, price has just been in and amongst the actual, those averages, those balance lines. You can see it's just been bouncing back and forth. It's intertwining. And then what happens is here we get a break, okay? We get a break. We're above the balance lines, and we've also broken that last trend line, okay? So once we're breaking that fractal, then we're able to sort of, enter the market, buy the market. Remember, our stop loss goes at the alligator's teeth, the red line, and then basically you trail that, okay, until actually you get taken out on it. And then what we can see is actually the price just goes a bit messy there. The price is along there with the balance lines, okay. The alligator's jaw is closed because he's fed so very well here. before actually it breaks down and starts to make its next move, okay, which is something we can look at a little bit later. But remember, that's what we said, when the markets, okay, and the balance lines are all together and that alligator's jaw is asleep, or when the alligator's jaw is flat, the market's asleep, the market's range bound, ignore it. It's only once it breaks, okay, only once it breaks that we start to become interested, okay. So using the fractals and the balance lines, and as you said, you can see the balance lines are all now starting to diverge. They're all starting to actually spread out, okay. The alligator's hungry and the alligator's eating, and that's what we want to do. So Tyrone says, what's the best time for this? Would you focus on daily? I'm assuming. Plowman asks, what time frame is better to trade with this horrible beast? Well, it's Plowman. It's only a horrible beast if you're on the wrong side of it and you get caught in the alligator's jaws. So what we want to do, we don't want to be caught in the alligator's jaws. We want to basically wait till those alligator jaws are nice and wide open, all right, and then we can ride with it. Personally, I have found this. I quite like this on the 4-hour time frame myself. But the thing about this is, because remember, it's fractals, it's balance lines. This can work across, 1-minute charts up to 1 monthly charts. A lot of that, remember, is about understanding your own trading self, your own trading personality. So, some people might trade very well down on 1-minute charts, but for others, that might not really suit them. Other people might prefer to trade daily charts, okay, because it means it's not that much time. They can actually just work it, things happen slower, and that can be better for them. And that is absolutely fine. That is absolutely fine. It's about knowing which is the best for you, okay? Philip says, hi, Paul. Do we need to trail the stop or is it built into the indicator? Sadly, it won't automatically trail it for you, Phillips. You'll have to do that yourself. But it's a very clear, easy, mechanical way. Okay, and I'm very big on mechanical trading strategies for most clients, because what it does is it just allows you to build that self-trust in with yourself. So if I just every time, as you can see, this particular example on the alligator. Let's get up the old drawing tool here. So we can see that price, alligator has gone a little bit of sleep. Then price is in amongst the averages, and then it breaks. Okay, breaks down and it breaks this last down fractal, and then we would be short. Okay, we're getting short here. Our stop loss is here at the alligator's teeth, and then as that basically moves down, we would just basically be following, okay, trailing our stop loss, okay, where the teeth is. And that will just allow us, we'd be sort of taken out around about here, okay? So remember, whenever you're doing a trailing stop of any sort, there is no perfection. You are never going to pick the tops and bottoms, okay, to get in or to get out. So don't even try, okay? It's pointless. It's unless you know what you're doing, it's a fool's endeavor. All you're trying to do here is you're trying to feed when the alligator's feeding, okay? When the alligator's hungry and it's open and wide and it's eating, that's actually all you want to be doing. All right, that's actually all you want to be doing. That's that's keep it nice and simple. And as Carol said, which is the beast's hungry point? Nice one. It's very good. Everybody's clearly getting the alligator metaphor. That's great. Hopefully you're able to see that on the charts. And as I said, you're looking to see price where it's been a little bit range, but a little bit consolidate in amongst the balance lines. Okay, in amongst the alligator's jaw. And once it breaks out of that, okay, once it breaks out of that, well, then that's actually the way you can work with that and just trade in that direction. Tyrone says, you just made it look so simple. Well, it's like anything in life. If you practice enough, things do tend to look simple. So it's and here we are using, this is a very, very simple way. Okay, so for new traders, this can be a very simple way to enable them to basically, keep out of chop markets, okay, range bound markets, and just basically get into trending markets that allows them to basically know when to get in, okay, know where the stop loss is going, know what actually they don't have to do anything once the trade is in, other than just move their trail or stop loss if the trade goes in their direction. So it's nice, it's simple, and when the alligator is hungry, when we get a good trend, you have the opportunity to do very well out of it. And Carol says, I like this metaphor, appreciate its usefulness. That's right. You're very welcome, Carol. We kind of sometimes, a nice, easy, simple metaphor helps people understand it and see what they're looking for in markets. Tyron says, are you waiting for another fractal triangle signal or just a candle close or wick beyond it? Okay. So, what that is that's an element of individual, risk assessment. So some people will be very happy to just trade price as it breaks through the kind of the level of the previous fractal. Some people prefer it to close on the other side of the fractal, and then enter the market. So some of it depends upon your own particular risk tolerances. In a slide or two later, I'll show you one or two of my own particular little tweaks and ideas about it, and you can do that. So Tyron saying it's the end of the US dollar CAD there, just after breaking the jawline. So what we see here is absolutely, Tyron, is that once price has broken through the alligator's jaw, well, do you know what, the market's changing, isn't it? The market is flipping, and that's what you can see in this particular example. And so that would be kind of more for maybe, let's say, a bit more of advanced operator right there. But yeah, you're absolutely right to see when price starts trading the other side of the alligator's jaw. Well, then we have to be thinking about how the market is reversing its direction. So, in conclusion, ladies and gentlemen, markets are chaotic systems with complex dynamics, all right? And this allows chaos theory to work well. Bill Williams explains chaos theory in his books and how to apply it by combining trading psychology, i.e. knowing yourself, with technical analysis. You utilize fractals as the first dimension of technical analysis, and you use the balance line, as the alligator as the final dimension. Both fractals and the alligators can be found on as indices, or indicators on MT4. Remember, when the alligator is asleep, the lines are intertwined with price, and we stay flat. When price is in amongst the alligator, don't bother touching it. When the alligator is hungry and looks to open its mouth, that is when we are looking to feed. That's what we're looking to do. So if you'll bear with me, what we'll do is we'll go across and we'll have a look at a couple of charts, and see what's been setting up and how it's been operating, and give you a little bit of an idea how to see and utilize the Bill Williams chaos theory methods on live markets. So, but as always, we appreciate some of you need more support, and we're always happy to help it. And the best way to do that is come and join us in the Trading Spotlight community, where we'll be posting elements. I'm going to be there for the rest of the afternoon if you want to come in and have a chat with me, and talk about your trading. And also you can get trading updates, And my colleagues, Marcus and Jens, they post some fantastic stuff on there every single day. And you can join that at tradersyard.com/group/312. And don't forget to join us next time, where my colleague Marcus will be talking on Wednesday about how to trade the DAX market open, including why the market open is one of the best times to trade the DAX, when should traders start preparing for the market open, and a step-by-step trading strategy for the trading the market open. That will be on Wednesday, 17th of June, 2 p.m. London time. So check your inbox for the webinar link, or go onto the website and sign up and register for the live webinars. As always, there's a huge amount of analysis, education, and further resources on the admiralmarkets.com website. And if you want to actually get in touch with us, you can email us at global@admiralmarkets.com. youtube.com/admiralmarkets, or facebook.com/admiralmarketsglobal. So I hope you found that useful. As I said, if you just bear with me, we've got about sort of 5-10 minutes left. So what we'll do is I'll switch across to the charts, and we'll have a little look at how they've been setting up at the moment, and hopefully that might just give you an idea of how you can see it and where you can find it on the particular platforms. So just bear with us a moment, and we'll switch across. Okay, so I'm hoping that you can still see me. Hope you can still hear me. Hope you can sort of see us all on there. Okay, hope you can see the charts. Okay, and Tyrone said he missed the Traders Yard end, but it's if you look on tradersyard.com, and then you'll find that there is a trading spotlight community element in there, and perhaps my wonderful assistant here could perhaps just put the link in there in the chat box to that. That would be fantastic. Carol says thank you so much for this nice session. Carol, you're very welcome. As I say, come and join us on Traders Yard. You see my colleagues Marcus and Jens are constantly putting up some great stuff there every single day. Robert says that's all good, that's great. Tyrone says awesome, that's great, that's super. We're really glad that you've enjoyed it, and if you're watching this on YouTube later, just give us a like, put some questions in. We love all of that kind of interaction. We really enjoy it. So here we have let's have a look what we're looking at here. What was it looking at before? Dollar yen. Okay, here's the dollar yen on the 4-hour chart. Okay, and as I said, I quite like the 4-hour chart myself, but I quite like trading 4-hourly charts anyway. So I find them a kind of a good medium sort of for myself. Okay, for myself, that you may be different. But in my own experience, 4-hour charts are nice charts to trade. And just to show you here, first and foremost, if you're looking to set up a template, or you're looking to try and set up your charts to use the Alligator, well then here we go. You've got insert here, indicators, and then you can see Bill Williams, and then you can go along and you can see the Alligator and the Fractals. As I said, there are a couple of other indicators, the AO, the Accelerator Oscillator, the Awesome Oscillator, Gator Oscillator, Market Facilitation Index. Maybe we'll put them in a part 2 to this, okay? But today, what we just wanted to focus on was just you having the ability to just, take away a very simple concept, see how it plays out in charts, and take it away and use it in your own trading tomorrow. Something that's very simple and allows you to basically effectively just, sort of trade markets using chaos theory on your in your favor. So hopefully you can see here, as I said, dollar yen, all right, and 4-hour chart. And let's get the old drawing tools out here, shall we? I mean, you can probably see here it's been pretty much, all right, price is intertwined, okay, with the Alligator, isn't it? The Alligator's lines are intertwined with price. The Alligator's asleep, okay? And what have we learned? That, or when the Alligator is asleep, what do we do? Okay, we do nothing. That's what we do. All right, we do nothing, because that's not what we're trying to do. Okay, we're not trying to fight the market. What's the point? Okay, we want to feed. We want to feed when the Alligator feeds. Okay, that's what we're looking for. And you can see that actually, we here have overnight. Okay, overnight price does kind of break these kind of last couple of fractals. Now this is kind of overnight here, and effectively, I wouldn't have been taking this trade because I don't normally trade kind of overnight, late night, putting new trades on myself. But you can see what happens is price tries to break through, but then comes right back to the sort of Alligator's, the Alligator's teeth. And price carries on, okay, and it just carries on, and you can actually see the price action starting to coil up, okay, which in itself is another good example that the market's getting ready to blow. And what we actually see is that prices are here, prices above, okay, prices above the balance lines, and then it breaks this fractal here, okay, breaks this fractal, which means that we're going to break out of that range and we are into the market. Okay, so, and this is a good question that Tyrone asked earlier. It was a case of do you buy when price just gets above the fractal, okay, which is as a breakout, or do you wait for the price to close? Now, of course, in this particular case, if you're trading just as it breaks through and your stop is there, well then you're managing your trade risk. Whereas for some people, if you're entering here and your stop is down where the teeth is, that becomes quite element on trade risk. So as I say, there's no perfection, okay? There is no perfection. It's about finding a way that you can consistently and simply just trade, okay? That you can actually follow trade after trade. That's what we're looking to move across here. And as we can see, you can see here that actually the price rallied very, very strongly. And you'll be looking to basically, okay, to effectively follow the red line, okay. The alligator's teeth is where your stop loss would be. So you'd be taken out here, okay. And then what we actually see is that price closes down and comes right beneath, okay, the alligator's jaw. And this is perhaps a little bit sort of on the advanced side, but we can see that the last down fractal was here. So not only have we gone through the alligator's jaw, but we've also gone through, okay, the alligator's down, the last down fractal, okay. So as a rule, we don't take trade down fractals, okay, until we've actually closed the other side of the alligator's jaw, if it's a strong reversal, right? But the more important thing for us is really just recognizing here, okay, when we broke through here, this was our long, okay, price was above the balance lines, okay, and the jaws opened. All right, the jaws opened, and that was the trade, okay. You just simple trade on, stop loss at the red line, trail your stop loss along the red line, and then once the alligator is fed, well then it's the party's over. But we can see that the market changed there and sort of drifted its way down there and rolled over. Let's have a look at one of the other two examples here. We've got so yeah. Here's the kind of the dollar CAD here. Okay, this is the 4-hour chart here, which is kind of interesting for us. And what we have here is, let's just get the old drawing tool up here. We can see that price is grinding its way up there and then actually breaks. Okay, it's broken the jaw line. Okay, then it breaks the down trend, and so you have the opportunity to trade on the downside here with your stop at the alligator's teeth, okay, riding that until actually price closes. Okay, price closes the other side of the teeth, then it closes the other side of the jaw. And price does trigger up before it comes back down. It doesn't actually break another up fractal for us to get in. It just basically, there's no trade for us there. It actually, price then goes into an alignment with the sort of the alligator's jaw before it drops down again. Okay, drops down again and breaks. Okay, breaks the last down fractal here before price runs its way down. Okay, and then price basically comes back to the red teeth here. Comes back to the red teeth here, so your stop loss would have been here. Okay, so you'd have had a nice little profitable trade, and then price continues to go down and actually gets back beneath the alligator's jaw. Okay, the alligator's mouth is beginning to open again, and we can see that actually price runs away. Okay, it runs away again down. Okay, with your stop loss trailing, okay, the alligator's teeth until you're taken out. You're taken out here. Okay, and then price moves back down beneath, and it puts in actually here a false breakout before price reverses. It gets above, okay, and closes above the alligator's jaw. Then you have the alligator, the last up fractal before you can actually switch sides and sort of trade on the bounce up. So there's a little bit of there's quite a lot going on there, but as I said, on 4-hour charts, okay, that's kind of like it's a nice kind of move, all right, as to actually sort of say you can do that. Tyrone says that I feel like the fake out is what catches me too often. Yes, the fake outs can happen. They do happen to everybody. But if you're just remembering that, you need price, okay, to be outside, okay, of the balance lines, you need price to actually to break the other side of the last fractal. Well, then, you're doing what you can to give yourself the opportunity to trade a true breakout. And there will occasionally, you will occasionally have, trades that don't work out. That happens to everyone. But what hopefully you can see from this is when they do work, you have the opportunity to actually to really sort of, really fill your boots in the same way that an alligator feeds when it's hungry. Someone there asks, is the balance line not for intraday? Yes, it can be used across all time frames. Okay, it depends upon how you particularly look to trade. So there you go. I hope you found that useful, ladies and gentlemen. Okay, I hope that's given you some interesting concepts and ideas to take away for your own trading. Sure, be able to sort of give us some feedback if you found it useful, if you like it, how it's particularly helped you. Philip says, thanks, Paul. I'll try it on demo to get a feel. That's exactly the best way to do it. As always, I wish you the best of success in your own trading. I look forward to speaking to you next week for our next trading spotlight webinar. Don't forget to join my colleague Marcus on Wednesday. And for those of you around this afternoon, come and join us in the Traders Yard, and I'll be happy to answer your questions there. So until that time, I wish you the best of luck and good success with your trading.